Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Travel deductions, ordinary and necessary again. So travel would include your hotel stay, your airfare, 50% for meals. That's still 50% even when you're traveling. Ground transportation, so Ubers, taxis, limos, and many other deductions. It could be dry cleaning. That's a deduction. But I tell people, don't pack your whole bag with your dry cleaning just so you can get the deduction. But dry cleaning is a deduction while you're on the road. One thing I do like to recommend as a little trick is if you have a meeting on a Friday, and then you are off Saturday and Sunday and you are not working, and then you work again on Monday, that whole hotel stay from Friday to Monday would be a deduction, even though you don't do work on Saturday and Sunday, because it is not a business day. Saturday and Sunday, they're considered weekends, and it would not make sense for you to leave and come back. So all of the airfare would be deducted. All of the hotel would be deducted, but only the meals on the days that you are conducting business. And a business day means you need to do 4 hours of business in that day. So you could even do Friday, 4 hours, 8 to 12, take off the rest of Friday, Saturday, Sunday, and then early Monday, 4 hours off, and then come back at 1 o'clock and work. That whole trip would be a deduction for you, except the meals on the days that you are not working.
Katrina, how does that go with the rental cars when it says ground transportation?
It's the same. The ground transportation, the rental cars, 100% all of the days, because they do not expect you to turn the car back in and re-rent it. So the whole rental car would be a deduction. Also, when you have an S Corp and a C Corp, we'll get more into that, you're required to have meetings. So board meetings, company board meetings where you're documenting what your goals are, what you're doing, your decisions. You can have those meetings, corporate meetings, in a location and have them for 4 hours. It's a deduction. If your spouse or your friends are part of your board and they're your consultants, then their trips are also deductible because they're part of your business. So that's a good way. If you have friends that are enterprising like you and entrepreneurs, and you want them to be on your board and great sounding boards for advice, they could be on your board. And then when you all take the trips, it's a deduction as well because it's a business expense. All right, hotels, airfare, this is just a broader deduction. Ground transportation, tips. We talked about laundry, but tips. So once you're giving tips, a lot of times that's cash. Just write it down on a sheet of paper. I gave tips. Also, special rules relating to traveling by boat. So there are different guidelines if you are traveling by boat. Say if you're on a cruise, there's different guidelines for business. Cross-country drives. If you're going from New York to San Francisco, of course, you got to stop. You're not going to be able to drive the whole way. So those hotels along the way are deductible. And again, 4 hours of business. So you only have to drive 4 hours a day for the IRS to say that that's reasonable business travel. And the hotels along the way would be deduction, and the food. Make sure that you're documenting all of that. Now, it could come up where if you have, your whole gang, your family, your children, and you're doing this, the IRS could question that. So just make sure you're documenting what you're doing in your drive. Of course, if you're moving offices because you're moving from, say, San Francisco to Dallas, that's a business deduction because you are moving your office if you had a home office or if you had an office in a different location. So that's just a whole nother set of rules for driving and deductions. Also, international travel have certain rules on the number of days, like travel days may not be a deduction in some criteria. Travel days could not be, and then the international days have limitations. So you need to understand what's deductible for travel based on international or domestic. And then also train is just regular. It's a deduction, just like air flights, but the drives cross country would be something that you would really want to document. Generally, you don't need to keep receipts for items under $75 unless it's lodging. So business owners, if you go to meals and it's under $75, you don't have to keep the receipt. So if it's on your credit card, that's good enough. You can still deduct it. No receipt is needed if it's under 75, but if it's lodging, you do need that receipt. So in the publication, IRS publication, if you just go to irs.gov, you put in publication 463, you can see the rules on the $75, but documentation is still required. Just saying, I ate here, it was $75. I ate with this person, but you don't have to have the actual receipt. Also, when you're traveling, there's something called per diem, and it's with the U.S. General Service Administration. They have their own per diem rates. If you go to this website, you'll see that there are certain rates for per diems based on the locations that you travel. You can just pay yourself a per diem for the days you travel, and you don't have to keep receipts as well. So that's a good area to look. It allows you to see what's reasonable, because what's reasonable in New York is going to be a lower amount, say in a smaller town, and you can pay yourself a per diem, or you can just go with the flat rate over the whole year. And there's a certain per diem rate where you don't have to worry about tracking every time that you're traveling and where you're going. But using these per diem rates are good because this is what the governmental employees use, and they've allowed other business owners to use this as well. Traveling mileage. Now, this is traveling within, you don't have to travel for a set amount of time. Now, that's the other item that I did not talk about, is when you're traveling, that travel deduction for hotels is within a certain mileage away from your home. So you need to understand that you can't say, oh, I'm getting a hotel, it's 10 minutes away, so it's a business trip. It has to be a certain mileage away from your resident for it to be considered out of town travel. Travel just for everyday travel, going around, running errands for your business, going to meetings, going to lunches, going to seminars. The IRS adjusts this mileage to better reflect the increase in fuel price. They've also decreased this rate at times when the mileage and the gas has gone down. They've decreased the mileage rate. There's an app called Mile IQ, and you can use that app. When you get in the car, you turn it on, you swipe left or right. If it's business, it's one way, and it will track your miles for you. And you would have a nice report at the end of the year to show the business miles. So Mile IQ, you can look that up. And I believe there's an app in QuickBooks as well, if you have QuickBooks, that does mileage tracking. So just Google, those two are the ones that I know about, and I'm sure there are others that are available. It is not too late. If you need a car, I don't say go get one just because you're getting a tax deduction. But if you need a car, you can purchase an SUV, a crossover vehicle, or a van. And it can be new or used. It has to be over gross vehicle weight of 6,001 pounds, but you get a bonus depreciation and Section 179 expenses of up to 28,900. The good thing about using this deduction is the depreciation is on a 5-year table, and there's no luxury limits on the vehicle, because some vehicles, when they're luxury, you lose some of the deduction. With the SUV and crossover vehicle, you can have an expensive luxury SUV, a crossover, Range Rover, Mercedes, or BMWs, and you're not subject to those luxury limits. I want to give you an example. You buy 100,000 SUV. Okay, it does meet the gross vehicle weight of 6,080 pounds. So it's right over the limit. A lot of auto manufacturers know the limit and they know how to get it right over the limit so you can take the deduction. It's a big deal for them. You are using it 90% for business. So what you need to recognize is you do need to track how much you're using for business. You buy the car in your business, but you still need to track. If you don't use it 100% for business, that's all right. But you must use it at least 50% or more for business. In this case, they use it 90% for business. The write-off could look like this. First, you get that $28,900 Section 179 depreciation I talked about. Then you get the bonus depreciation, 48,880. You're going to get 2,440 and 20% micros depreciation. That's another depreciation. So the write-off for this $90,000 car in the first year, you're using it 90%, could be as high as $80,000 write-off. Know the tax laws. Is benefiting business owners, but you need to know how to maximize and use it to your benefit. So watch out for 2026. These laws were started, a lot of them, when Trump did the rewriting of the tax code. But in 2026, a lot of these laws are going to go back. So we may have entertainment again. The meals may be 100%. We don't know what's going to happen, but in 2026, these laws will expire. And the legislative have to vote again to say if we're going to keep them, they're going to change. So this is going to be another opportunity to just stay abreast of what's happening and what's coming up in 2026. Where do I go from here? Tax advisory services, a little higher investment, but in exchange, we work directly with you to grow your wealth over a period of a year or longer. So that's the plan where I'm actually looking at your situation, developing, okay, you need a LLC, you need an S Corp. I'm going to look at your tax deductions. Okay, where are you missing? We may need to go back 3 years. So my investment, what I'm saying is an investment, could really be money in your pocket because I'm going to save you money. Plus, we may go back some years and get you some money because you have losses in some years and gains in others.